Good afternoon, live from Chicago. This is Chris Robinson for LiveFuturesTalk.com, coming to you from our studios 2 blocks west of the Chicago Board of Trade building. Okay, today in the metals, some evening up positions. We were actually, I'd say sideways to a little bit higher, caught a little bit of a bid. Gold was up above the $900 level. We tested it, 892 in the June. I talked about how that was going to be an important number, and it's been a good level to both get short against and long above. As far as resistance above, the number you should be taking a look at, our low right here, and we switched to the June contract finally, thank you. Our low right here was, let's see, 877 and change, right down here. Our high for this move was 1,021 up here. So from this retracement, okay, from this high to this recent low, I like the first resistance I like above as an area to sell would be 932. We got within 20 bucks of that today. 932, 941 is halfway, 949, basically 950, halfway back. And then above that, 966. Think about those numbers for June gold. For silver, May silver, we're still in May silver. Same thing. We had this nice double top up here around the 2094 level. Got some good resistance up there, 2094. Traded up above the $21 level, but this one day here. But what I really, really like on the way up here would be $18, 1806. That would be the first resistance. So today we were at 1750, so another 50, 60 cents on the way up. Halfway back, 1861, and then 62% retracement will be 1916. 1916 gets us right back up to here. So those are technical numbers you need to be looking at for the silver. And then finally, for the crude, very quickly, there we go, May crude. You can see where we've got good support back down here. I talked about this before. We had a nice rally. Now we've had a correction, a rally, correction, a rally. And I've talked about the significance of the $100 barrel oil. We know we bounced off it here. 1, 2, 3, 4, 5, 6 different trading days. It's giving you a good opportunity to either get long or get short, depending on your bias, and then to trade out of it. So round numbers are very, very important. Today we had a $3 range, a high of 106, a low of 103. We're currently at 104, basically unchanged on the day. Let's see. If we really get going to the upside, we've got to go back and test our March 27th high, 108.10, our March 18th high, 108.85. On the downside, support-wise, if we start to clear things out, you've got to look at the March 20th low at 98.90. And then if it really starts to get going to the bearish side, there's a gap, February 20th, February 15th, way back in here. There's a gap on the daily chart, which doesn't show up on this one. It shows up on my charting service for May crude. There's a gap from 98.90 down to from 96.95 to 96.15. So there's an 80-cent gap we could go back and have to get on the daily charts. Take a look at that for your crude. Tomorrow's unemployment. I don't want to beat a dead horse, but it's going to be very, very important. It's going to, it's going to determine what's going to happen with interest rates. Interest rates affect where the dollar is going to go. That affects where the indexes are going to go. And these funds out there, they once they make their decision, they're going to come for it. It's going to be volatility and then momentum. So I'd be very, very careful tomorrow. We're going to have some good action. I like the $100 level, and then you got to take a look at the old highs when we got up to 109, 110 up there. I'd be very, very careful about getting married to any of your positions tomorrow. There's going to be plenty of opportunity. And the only people who are going to get hurt are the pigs. If you're bullish or you're bearish, you're going to have plenty of opportunity to put on a winning trade tomorrow. Just don't get greedy. Be quick on your feet. And make sure you've got your stops in. For LiveFuturesTalk.com, this is Chris Robinson. Have a great day tomorrow. Again, the number comes out at 7:30 Chicago time, 8:30 New York time. So, bon appetit.